Urgent. Entering the 2026 South Florida real estate market with a 2021 strategy is a fast way to lose money. 5 years ago, low interest rates and high emotional demand created a very forgiving market. Today, those conditions have vanished, replaced by a much harsher set of financial realities. The current market is defined by high insurance premiums, there are mandatory structural audits for older buildings, and updated state laws that have changed how properties are bought and sold. Many sellers are still spending thousands on aesthetic upgrades, but they are finding that buyer psychology has shifted toward risk aversion and long-term cost control. Buyers face their own hurdles, often focusing so much on the initial down payment that they neglect the rising peripheral costs of actually owning the home in Florida. We are seeing a shift where the market no longer prioritizes cosmetic perfection. Instead, success now depends on a property's functional insurability and how well the parties have prepared for the transaction. There are 4 specific market traps currently catching unprepared participants, often resulting in collapsed deals or significant financial strain after the sale. Protecting your equity in 2026 requires moving past emotional decisions. You have to focus on the structural stability that modern buyers and their insurance companies now demand. The first trap for sellers is over-improving the visible parts of a home, while the systems behind the walls continue to age. A $15,000 bathroom renovation adds very little value if the house has a 17-year-old roof that makes the entire property uninsurable. In Florida, most deals now hinge on the 4-point inspection. This is a specialized assessment required by insurance carriers that evaluates the current condition of a home's HVAC, electrical, plumbing, and roofing systems. As this chart shows, failing a 4-point inspection creates a domino effect. If systems are too old, insurance is denied, halting the transaction. Without affordable insurance, the buyer cannot secure their mortgage, and the return on your $20,000 renovation drops to exactly zero. A more effective strategy is to redirect that budget toward unglamorous essentials. Replace an outdated electrical panel or install a new water heater before you list. Ensuring these invisible systems are in good repair helps the home pass the underwriting process and keeps the buyer's financing on track. In this market, a clean inspection report is more valuable than a waterfall island. If a house is functionally obsolete to an insurance company, the deal often dies before it even reaches the appraisal. You don't always need a major renovation budget to drive demand. There are low-cost alternatives that offer a much higher return on investment. The first step is a professional deep cleaning. It typically costs less than $250, but it creates a positive first impression that buyers feel the moment walk in. Next is a lighting overhaul. Standardizing your bulbs to 3,000 or 4,000 Kelvin LEDs makes the home feel brighter and can make smaller rooms feel more open. When it comes to paint, avoid the millennial gray that was popular for years. To many buyers today, that look signals a cheap, dated flip. Instead, use warm whites or soft beiges. These colors align with the current preference for organic modern styles and help the house feel more inviting. The goal is to make the house profitable. Sellers who focus on these high-yield, strategic tweaks often walk away with more money than those who attempt major, unproven remodels. For buyers, the trap is focusing solely on the down payment, while losing sight of the other upfront costs. Buyers expect one large expense, the down payment, but Florida closing costs add 2 to 5%. Then there are localized costs like HOA and CDD fees, used to finance community infrastructure, which significantly increase your true monthly housing cost. This math becomes even more complicated for those buying older condominiums, where new state structural inspection laws are changing the landscape. If you don't review the reserve study for a building over 30 years old, you might be blindsided by a special assessment, a one-time fee charged to owners to cover major repairs. These assessments can be large enough to make a previously affordable condo impossible for a buyer to maintain long-term. Getting the keys to the property is only half the battle. You have to ensure the hidden math doesn't undermine your financial stability after you move in. The final trap involves the legal shift in how real estate representation and commission agreements work in 2026. Commission structures are no longer standardized. Every fee and service provided by an agent is now a point of negotiation. Signing these updated agreements based on old assumptions can be a mistake. It is now possible to accidentally commit to thousands of dollars in out-of-pocket fees if you don't understand the terms. There is also the issue of unrepresented buyers. When one party doesn't have an agent, the legal and financial responsibilities of the other party can change in ways that aren't always obvious. You should demand clear answers on who represents whom and how everyone is being paid before you list a home or step inside a tour. Dealing with vague agreements creates risk. Having a clearly defined contract, however, puts you in a much stronger position to negotiate. Direct, avoiding the technical details of the paperwork because they feel uncomfortable is a guaranteed way to lose equity that you've worked hard to build. South Florida offers significant tax advantages and lifestyle benefits. It remains a high-value market, but now requires a more precise approach to navigate safely. For buyers, a winning strategy often means prioritizing a structurally sound, wind-mitigated asset over a house with the perfect kitchen in a high-risk flood zone. For sellers, the path to a successful sale is pricing accurately and ensuring the home's mechanical systems can pass a rigorous insurance inspection. To help you manage these changes, we've created the 2026 Florida Real Estate Survival Guide. The guide includes a true cost calculator for buyers and the specific 4-point checklist that insurance companies use to evaluate properties. Taking a few minutes to prepare now is the best way to avoid losing tens of thousands of dollars later in the process. Don't rely on guesswork in this market. Download the Survival Guide today and build a data-driven plan to protect your investment.